Welcome to Coverage and Clarity with Jacques, the podcast where we break down protection, planning, and peace of mind so you can make confident decisions for the people who matter most.
Welcome to another episode of Coverage and Clarity with Jacques. I'm your host, Jacques Jean-Baptiste, and I want to thank you today for joining me. So whether you're listening to me while driving, working, exercising, or relaxing at home, I appreciate you being here with me. Here at Coverage and Clarity with Jacques, my mission is simple: to help you better understand insurance, financial protection, and the decisions that could impact the people you love the most. Because insurance is not just about policies. It's not just about paperwork. It's not just about premiums, benefits, or numbers on a page. At its core, insurance is about people. It's about protecting your family. It's about creating confidence. It's about making sure when life happens, and we all know life can change in a moment's time, the people we care about are not left carrying a burden they were not prepared for. Today's episode is especially important because we're discussing a question I hear all the time. What is the difference between final expense insurance and whole life insurance? And maybe you've been wondering the same thing. Perhaps you may have heard the terms before. Maybe someone has mentioned final expense coverage to you. Maybe someone has talked to you about whole life insurance. Maybe you've seen advertisements online or received information in the mail. And you may have asked yourself, are they the same thing? Is one better than the other? Which one should I consider? Do I even need this type of coverage? Those are all great questions. And today I'm going to break it all down for you. Understanding the confusion. One of the reasons this topic creates so much confusion is because on the surface, final expense insurance and whole life insurance can look very similar. Both are generally permanent life insurance policies designed to provide lifelong protection, able to provide a death benefit to beneficiaries, typically funded through premiums paid over time. So when people hear about them, they often think, wait a minute, if they both last my whole entire life, what's the difference? That's exactly what we're going to clarify today. Because while there are similarities, there are also some important differences. The differences often come down to the purpose of the coverage, the amount of protection needed, the financial goals behind the policy, the flexibility someone wants, the stage of life that they're in, what they want the policy to accomplish. And the last point is extremely important because the best insurance decision is not simply choosing a product. The best insurance decision is choosing a solution that matches your goals. Insurance should start with a why. Before we compare final expense and whole life insurance, I want to start with something I believe is very important. Every conversation should begin with one question. What are you considering the coverage in the first place? What problems are you trying to solve? Are you trying to make sure your family does not have to worry about funeral costs? Are you trying to leave money behind for your children or grandchildren? Are you trying to create a legacy? Are you looking for a lifelong protection? Are you looking for a policy that may build cash value over time? Are you simply trying to make sure your loved ones have financial support when you are no longer here? The answer to those questions helps determine what type of policy makes sense for you. Because insurance is not a one-size-fits-all. A 75-year-old looking for burial protection may have a very different need than a 45-year-old business owner looking for lifelong financial planning strategies. Both situations are serious, both deserve attention, but the solution may look different. Here's a real-life perspective. Let me share something I've learned through my years working in the banking and insurance industries. Many people do not avoid buying insurance because they do not care about protecting their families. Most people want to protect their loved ones. The challenge is often confusing. People hear different opinions. They receive different advice. They see different advertisements. and sometimes they become overwhelmed. They start thinking, insurance is too complicated. I don't know where to begin. I don't want to make the wrong decision. And that's exactly why education matters. My goal is never simply to tell someone, buy this policy. My goal is to help people understand what options exist, how those options work, the advantages and considerations for each, how those choices fit into personal situations, because an informed decision is a confident decision. So what is final expense? Before I compare final expense and whole life, let's define each one clearly. Final expense insurance is designed primarily to cover the costs associated with end-of-life expenses. This may include funeral expenses, burial or cremation costs, medical bills, outstanding debts, travel expenses for family members, other immediate financial obligations. The purpose is simple: to provide a financial resource so your family does not have to shoulder those expenses alone. Many final expense policies are smaller face amounts compared to traditional life insurance policies. For example, someone may purchase a coverage ranging from $5,000, $10,000, $15,000, or $25,000, sometimes even higher depending on the carrier and the circumstances. The goal is usually not wealth creation. The goal is creating immediate financial protection for final obligations. What is whole life? Now let's look at that. Whole life insurance is permanent insurance. That means assuming premiums are paid according to the policy requirements, your coverage can remain in place for your whole entire lifetime. Whole life insurance can provide a guaranteed death benefit, lifetime protection, potential cash value accumulation, financial planning opportunities. Whole life insurance is often used for broader goals. For example, someone may want to leave a legacy for their family, create an inheritance, provide funds for future generations, support estate planning goals, build a financial asset. The policy is designed with a broader purpose beyond only covering final expenses. So why does comparing them matter? You might be thinking, both of those sound like good options. How do I know which one makes sense? That's the right question. The answer depends on understanding the differences, because choosing the wrong type of coverage can create challenges. For example, someone may purchase a policy that is too small for their goals, or someone may purchase a policy with coverage that is realistically needed. The objective is to not have the biggest policy. The objective is to have the right policy, the right amount, the right purpose, the right fit. Here's a simple example. Let's imagine two individuals. Person number one, 72-year-old. They have retirement income. Their home is mostly paid off. Their biggest concern now is, I do not want my children paying thousands of dollars for my funeral. For that person, final expense insurance may be a very appropriate solution. Now imagine person number two. They are 50 years old. They have children. They want to leave money behind. They are thinking about creating a legacy. They want lifelong protection as part of their larger financial strategy. For that person, whole life insurance may be worth exploring. Notice something important. Neither person is wrong. Neither choice is automatically better. The need is different, the goal is different, and the solution should match their goal. Now, setting the foundation for today's conversation, what I'm going to do throughout this episode, I'm going to answer some important questions. What exactly is final insurance? What exactly is whole life insurance? What are the similarities? What are the differences? What's the advantage of each? Are there situations where one may make more sense than the other? What common mistakes should people avoid when looking into these two? And more importantly, how do you make a decision based on your personal needs and financial goals? Because at the end of the day, insurance is not about buying a product. It's about creating protection. It's about creating options. It's about creating a peace of mind. So before I compare final expense insurance and whole life, we need to understand the categories they belong to. They both belong to permanent life insurance. So why is the difference between final expense and whole life insurance? We talk about why this matters. We talk about the importance of understanding the purpose behind insurance, not just looking at a policy as a piece of paper, but understanding what the policy is designed to accomplish. Because every policy has a purpose. Every family has a different story. Every individual has a different goal. And the right solution begins with understanding the foundation. So before we compare final expense insurance and whole life insurance directly, we need to talk about something they both have in common. There are forms of permanent life insurance. Understanding permanent life insurance is the key to understanding why these products work the way they do. The two major categories of life insurance. Well, let's look at the big picture. Number one, temporary protection, commonly known as term life insurance. Number two, permanent protection, which includes protect products such as whole life, final expense, universal life insurance, and indexed universal life insurance. Now, understanding the difference between temporary and permanent coverage is extremely important. But the biggest question is, how long do you want the protection to last? Term insurance protection lasts for a specific period. Let's briefly talk about that first. Common terms for term insurance could be 10 years, 15 years, 20 years, or even 30 years. The idea is simple. You purchase protection during a specific stage of your life when your financial responsibilities may be the highest. For example, a young family may purchase term insurance while raising children, paying off that mortgage, building a career, creating financial stability. The purpose of the product during those years is very important. If something happens during that term period, the policy provides a death benefit to the beneficiaries. However, when the term ends, several things can happen depending on the policy. The coverage might expire, the policy may become more expensive to continue, conversion options may be available. Term insurance can be a very valuable tool, but it's designed differently than permanent coverage. Permanent life insurance is designed to last. Permanent life insurance is designed to provide coverage for your whole entire lifetime, assuming the policy requirements are maintained. Now, this is the category where final expense insurance and whole life fall. The primary purpose, lifelong financial protection. Instead of covering for a specific period, permanent insurance is designed to remain in place throughout your life. This creates several advantages. Advantage number one, lifetime protection. The first major benefit is predictability. Many people want to know when they pass, will their family have some sort of financial support? Permanent life insurance is designed around that concept. When someone passes away at age 65, 85, or even beyond that, the policy is intended to provide a death benefit as long as the policy remained active. This could provide tremendous peace of mind for them because life is unpredictable. No one knows exactly when they'll need that protection. But permanent insurance is built around being there whenever that moment occurs. Advantage number two, financial protection. Another important benefit is preparation. Many people spend their lives building and protecting their assets. They buy homes, they save money, they invest, they build businesses, they create retirement accounts. But one area that is sometimes overlooked is preparing for the financial impact that occurs after their death. And that impact could be significant. According to the National Funeral Directors Association, funeral and burial expenses can represent a substantial financial burden for families. Now, beyond the funeral costs, families may also face remaining medical bills, credit card debts, mortgage obligations, legal expenses, travel costs, loss of household income. Now, permanent life insurance creates a financial resource that can help address these responsibilities. Advantage number 3, predictability and guarantees. One reason many people appreciate permanent life insurance is the concept of guarantees. Depending on the type of policy and carrier, your permanent policy may offer a guaranteed death benefit, guaranteed premium structures, cash value accumulation opportunities. These guarantees can provide stability, and stability is something many families value, especially when planning for the future. Understanding cash value. What does it mean? Now, this is where some confusion begins. Often people hear, whole life insurance builds cash value, and they wonder, what does that actually mean? Let me explain to you simply. A permanent life insurance policy has two primary components. First, the life insurance protection. This is the death benefit that goes to your beneficiaries. Secondly, the cash value component. Over time, a portion of the premium may accumulate as cash value inside the policy. This cash value could potentially grow based on the policy design. The purpose of the cash value is not simply to create a savings account. It's part of an overall structure of the insurance contract. Depending on the policy, cash values may provide additional financial flexibility. For example, some policy owners may access available cash values throughout the policy loans and withdrawals. However, it's important to understand that accessing cash value can impact the policy itself, the death benefit, and the future performance. This is why working with a knowledgeable insurance professional is important. So why do people choose permanent life insurance? Let's talk about the reasons to consider this. Different people have different motivations. Some people want protection for final expenses. They want to make sure their loved ones are not burdened with funeral and related expenses. Others want legacy planning. They want to leave something behind for children, grandchildren, or charitable causes. Estate planning. They want a financial tool that may support their overall estate strategy. Business planning. Business owners may use life insurance as part of the business continuation or succession planning. Financial stability. They want lifelong protection that they could count on. Again, the important thing is understanding the individual's goal. Now that we understand permanent life insurance, we can begin to see where final expense and whole life fits. Think of permanent life insurance as the larger category. Inside that category are different solutions designed for different needs. Final expense insurance typically focus on making sure the loved ones have money available for their final costs. Whole life insurance may focus on creating a lifelong protection with broader financial planning possibilities. Both can provide valuable protection, but the design, the purpose, and the typical uses may all be different. Here's a common mistake people make when comparing products. First, identifying their goals. They ask which product is cheaper or which policy is better. The better question that they should ask is which policy better matches what I'm trying to accomplish. A hammer and a screwdriver are both useful tools. We all agree on that, correct? But they solve different problems. Insurance works the same way. The right tool depends on the right job. Now, preparing the comparisons, I want you to understand what permanent life insurance is, why people choose lifetime protection, how it differs from temporary coverage, and what purpose it matters when selecting your policy. Now, let's do a deeper dive. I'm going to discuss with you specifically final expense coverage now. Final expense, what does it really cover? Why so many families consider it, who it may be designed for, the benefits it could provide to you and your family, common misunderstandings people have about it, because understanding the detail is where the true clarity begins. Remember, the goal is not simply to have insurance, the goal is to have the right protection for the right person at the right time. Now let's focus on the first side of our comparison, final expense insurance. And I want you to begin by saying something very important. Final expense insurance is one of the most misunderstood areas of life insurance. Some people hear the word final expense and immediately think that's for old people. That's just for burial. Or that's not real insurance. Those assumptions can prevent people from understanding how valuable this type of coverage can be. So today, I want to bring you clarity on this topic. I'm going to explain what final expense insurance is, why people choose it, who it may benefit, what families should consider before making the decision. Because the goal is not simply to buy coverage. The goal is to understand, to protect, and to put it in place for the right time. With final expense coverage, let's define that as well. Final expense is a type of permanent life insurance designed primarily to help cover your expenses that occur at the end of life. The purpose is to provide death benefits that you and your loved ones could manage financial responsibilities. That includes funeral expenses, burial or cremation costs, cemetery expenses, medical bills, credit card balances, personal loans, outstanding household expenses, travel costs for family members, other financial obligations. The goal is simple. Make sure the family has the financial support during one of the most emotional and difficult times they may ever experience in their life. Because when a loved one passes away, families should have the opportunity to grieve. They should be able to focus on memories. They should be able to support one another. They should not have to immediately worry, how are we going to pay for everything? Will the mortgage be paid this month? The emotional side of financial planning, many people often forget, is that there is an emotion that comes at the passing of a loved one. Many families do not realize the impact of that person until they are facing it. Now imagine after the family member has passed, you now add funeral decisions that need to be made, bills arriving in the mail, unexpected expenses, pressures to make quick financial decisions. This could create tremendous stress on a family. That's why final expense insurance helps address one of the most specific terms. Provide a financial resource when it's needed the most. It's not about the size of the policy. It's about the purpose behind the policy. Now, with funerals, it involves many costs. The professional services, transportation, preparation of remains, facility costs, burial or cremation arrangements, memorial services, cemetery-related expenses. Those are all direct costs. Also, you got to think about the spouse. They need time away from work. Children may need to travel. The household bill still continues. Medical expenses may still remain. The financial impact extends beyond the funeral itself. This is why planning ahead matters. People often say things like, I don't want my children to have to pay for their funeral, or I don't want my spouse to have to deal with expenses, or I have worked hard all my life. I don't want to leave behind problems for anybody. And I believe that all comes from a place of love. It's not about preparing for death. It's about protecting the people who matter the most while you're still here. Now, how much coverage is typically available? Well, the average amount for final expense could be anywhere 5,000, 10,000, 15, 20, 25, and sometimes even higher. The reason for this is because the smaller the policy, they're designed to address specific purposes. Now, final expense insurance could be appropriate for many different people, but it's especially common among individuals who want to make sure the costs are covered, retired or approaching retirement, have limited existing life insurance, want affordable lifelong protection, want simplified coverage options, want to leave their family with financial assistance. A common misconception is, I'm older, so it's too late for life insurance. That is not necessarily true. Many final expense products are specifically designed to help people obtain coverage later on in life. Of course, eligibility, the cost, and the availability of benefits depend on individual circumstances, such as their age, the coverage for the guidelines of different carriers, and their health. It's also important to remember there are still available options at this point of life. Another reason people may consider final expense insurance is that the application process can be sometimes simpler compared to larger traditional life insurance policies. Depending on the insurance company and the product that they choose, medical exams may not always be required, health questions may be very limited, the application process may be more straightforward. This could make coverage more accessible for individuals who may have concerns about qualifying. However, it's important to understand simplified does not mean automatic. Every carrier has its guidelines. Health conditions, age, and other factors can affect approval. This is why working with an experienced insurance professional can be very valuable to you. A knowledgeable agent can help identify solutions that align with your situation. Now, benefit number one, lifetime protection. Because final expense insurance is generally permanent insurance, the goal is to provide coverage throughout your lifetime. The need for final expense does not disappear as you get older. In fact, planning often becomes more important. Benefit number two, financial relief for family members. This is perhaps the biggest benefit. Your policy provides beneficiaries with funds that they could handle expenses during a very difficult time of their life. Benefit number three, predictable planning. Many people appreciate knowing they have something in place. There is comfort in having a plan. Benefit number four, affordable protection. Because final expense policies typically have smaller death benefits, they may provide more affordable options for individuals looking for specific protection. What final expense is not made for is not designed to replace years of income. It's not there to pay off large mortgages. It's there to create not there to create a major inheritance, and it's not for extensive wealth transfer strategies. The beneficiaries, though, yes, they will have something to take care of those final expenses, typically to cover the funeral costs, but the intended purpose of final expense is usually for the immediate protection at the time of need. Here's a real life example. Let's consider a person. Let's call her Maria. She's 76 years old. She's retired. She has worked hard throughout her life. She does not have significant debt, but she knows funeral expenses can be expensive. Her biggest concern is not leaving her children with financial responsibility. Maria may not need a $1 million policy. Her goal is simple. She wants to leave her family with money when she passes away. A final expense policy may align well with that goal. Now compare Maria's situation to someone younger who wants to build a larger legacy. They may require a different conversation. And that brings us to a very important point. Final expense insurance is not about better or worse. It's about being designed for the specific purpose. Now, when someone sits down with an insurance professional, the conversation should not begin with, what policy should I sell you? The conversation should begin with, what are you trying to accomplish? Because the right question leads to the right solutions. Questions like, who are you protecting? What financial responsibilities do you want covered? How much protection makes sense? What can comfortably fit into your budget? What goals do you want this policy to accomplish? That is where true planning begins. Transition to whole life. So now that you understand what final expense is, let's look into whole life policies. Its purpose, its benefit, who may consider it, why families value this type of protection. Whole life insurance shares similarities with final expense insurance, but could also serve a broader goal. So what I want to go over with you now is what whole life is, how it works, why people choose it, how cash value fits into that picture, and why it may be appropriate for different financial objectives. Because clarity comes from understanding the complete picture. So far, we established something very important. Insurance decisions should always begin with understanding the purpose. It's not about finding the biggest policy. It's not about choosing what someone else chose. It's about understanding your goals, your family's needs, and what you want coverage to accomplish. Now, let's focus on the other side of the conversation, whole life insurance. This is where many people have questions. They ask, isn't whole life insurance expensive? Does it really build cash value? Is it only for wealthy people? Why should someone choose whole life instead of another type of coverage? Those are all excellent questions. So today, I'm going to bring you clarity to what whole life is, how it works, and why millions of families use it as part of their lifelong financial planning. Now, the word whole is important because the purpose is to provide coverage for your whole entire life, not just for a specific period like a term policy. Assuming you pay premiums according to the policy terms, whole life insurance is designed to remain throughout your lifetime. It generally provides a death benefit for beneficiaries, guaranteed protection, level premiums to the policy design, and cash value accumulation. The purpose of whole life insurance is broader than simply covering final expenses. It could be used as a financial planning tool designed to address multiple goals. Component number one are the first part of the insurance itself. This is the death benefit. The death benefit is the amount paid to your beneficiaries when you pass away. This money could help your loved ones with needs such as funeral expenses, outstanding debts, income replacement, education expenses, estate planning needs, and legacy goals. If the death benefit is primarily reason for the life insurance, it creates a financial support at the time the family needs it the most. Cash value, the second component, which is what people talk about. Cash value is a feature within the policy that may accumulate over time based on the terms and guarantees of this contract. It's not the same thing as putting money into a traditional account, savings account. It's part of a lifetime insurance contract. The cash value grows according to the policy structure and can provide additional financial flexibility during your lifetime. How does it work? Well, a portion supports the cost of insurance, a portion supports the policy expenses, a portion contributes towards the cash value component, and over time, that cash value may grow. One reason people appreciate this feature is that it creates an additional financial resource. Depending on the policy owner may have ability to access cash throughout their life through policy loans, through withdrawals, or other policy options. However, it's very important to understand that accessing cash values affects your policy itself. Loans and withdrawals may reduce the death benefit or impact policy performance. This is why proper guidance and understanding is essential. So why choose a whole life policy? Let's talk about that. Number one, lifetime financial protection. Some people simply want to know that the coverage will last their whole entire life. They do not want to worry about what happens when the term expires. They don't want to worry about what is permanent solution that they need to find later on. These individuals, lifetime protection can also provide confidence and stability. Reason number two, legacy planning. For some, it means leaving money to children. For others, it means helping grandchildren, supporting a family charity, supporting other charities, creating an inheritance, providing financial opportunities for their future generations. Life insurance can become a tool that helps turn all those intentions into reality. Estate planning considerations. Families with large estates may use life insurance to help address estate liquidity needs, equalizing inheritance among the heirs, providing financial resources for beneficiaries. For example, a parent may have one child who inherits a business, but the other child who does not. Life insurance may provide a way to create balance. Again, every situation is unique and professional guidance is important. Reason number four, financial confidence. Another reason people choose whole life insurance is because the predictability it may offer. They know and appreciate that they have a lifelong coverage, they have guaranteed benefits, they have a plan in place. Financial confidence comes from preparation, and preparation comes by reducing uncertainty in life. Now, one of the questions that I'm often asked is, that's for wealthy individuals, correct? Well, that's not true. Whole life is certainly used for advancing financial planning. It's also used and appropriate for everyday families who want lifelong protection. Families such as teachers, business owners, parents, retirees, grandparents. People from different backgrounds use whole life for different reasons. The key question is whole life expensive? The better question to ask is, what problems is the policy designed to solve? Whole life versus just saving money. Another question people ask me, why not just save money for myself? That's a fair question to ask. Saving money is important, and we should do that no matter what. Investing is important. Building assets is important. But life insurance provides something that's very unique, a guaranteed death benefit from the beginning of the policy. For example, you can spend years savings, but something unexpectedly happens, there may not be enough cash accumulated. Life insurance provides immediate protection. That is one of the fundamental differences between insurance and traditional savings. Insurance transfers the risk from the insurance company to you. It creates a financial protection today, 90 years from now. Let's bring it all together. Final expense insurance may be a strong fit for someone who wants affordable lifetime protection, coverage focused on final expenses, less financial burdens on loved ones. Whole life insurance may be a strong fit for someone who wants lifetime protection, broader financial planning opportunities, legacy creations, larger financial goals. The key is alignment. The right coverage is a coverage that matches your purpose. Now, we have covered what these policies are, how they work, how they compare, how they may fit different situations. But there are still important questions we need to answer. Because when it comes to life insurance, there are many myths and misconceptions. People hear things like life insurance is too expensive. I'm too old to qualify. Life insurance for is bad for having whole life versus term. Final expense insurance is only for funerals. These are misunderstandings that could prevent people from making the informed decisions that they need. So as we wrap up today, I want you to remember one thing. Final expense insurance and whole life insurance are not about choosing the winner. They're about understanding which solution aligns with your goal. Final expense insurance may provide comfort to someone who wants to make sure their final responsibilities are handled. Whole life insurance may provide confidence to someone who wants a lifelong protection and a broader financial strategy. Both can be meaningful, both can serve families, but the key is making the informed decision. If you're listening to me today and you've been putting off this conversation, I want you to consider starting with education, start with a question, start with understanding your options. You do not have to make a decision based on fear. You can make decisions based on clarity. That's exactly why this podcast exists. Final expense, primarily for end-of-life expenses, burial and funeral costs, affordable lifetime protection, reducing financial burdens on loved ones. Whole life is designed for lifelong protection, larger financial goals, legacy planning, cash value accumulation opportunities, broader financial strategies. Now, both of these can provide meaningful protection, but the right choice depends on your personal goal. So as I close out, I want you to remember, insurance is not about planning for something negative. It's about preparing for something inevitable. None of us knows exactly what tomorrow holds, but we could choose how we are prepared. The greatest gift you could give your family is not just what you leave behind. It's a peace of mind knowing we cared enough to prepare. Now, thank you again for joining me on Coverage and Clarity with Jacques. I hope today's conversation helped you better understand the difference between final expense insurance and whole life insurance. My encouragement to you is simple. Take the time to review your current situation, ask questions, get educated, make sure your coverage reflects the life you've built and the people who you want to protect. And remember, you do not have to negotiate all this alone. If you have any questions about life insurance, the final expense preparation, retirement strategies, or protecting your family's financial future, I would welcome the opportunity to have a conversation with you. Remember, I provide coverage to clients nationwide. To contact me, call or text my studio at 631-594-8118. Once again, that's 631-594-8118. My goal is always the same. It's to guide you with clarity, compassion, and integrity. Because when it comes to protecting people we love, having the right information can make all the difference. Thank you for listening today. Thank you for trusting me with your time. And until next time, stay protected, stay prepared, and continue creating your legacy. Now, this is Coverage and Clarity with Jacques, where we make the complex simple and help you move forward with confidence. Until next time.